Okay, folks, welcome to Best Stock Charts for the coming week. This is Bob Desmond, and this is where we try to inform and not influence you by having you learn how to read the stock charts, because in the coming year, it is going to become essential that you familiarize yourself, if you're not comfortable with doing so right now, with how to read a chart. And if you're not currently a subscriber to my YouTube channel, that's a great place to start. We focus a lot on technical analysis. So what we're going to do today is I'm going to kick things off with the story that is going out there on the financial news media, and the story being stocks are cheap. I was driving the other day, I'm listening to Bloomberg, and this guy comes on, I can't even remember his name, just another talking head meme, and he starts talking about how stocks are so cheap on a historic basis. And I had to laugh. I said, so this is what they're going to go with to try to get this market rallying. So I'm going to talk about the game that's being played first. Second, we're going to talk about how the charts helped us last week in playing the market and having a very good week. And then we'll segue over and into some best stock charts for the coming week. So let's get into it, the game. So for the most part, you have fund managers out there that by their charter must be net long the market. And when you have more mutual funds than there are stocks, that becomes a problem. So it is in their interest to get this market moving higher as best they can. So what do they need to do? They need to speak their book, and they need to cheerlead the market. And that's how they get invited on to Bloomberg, CNBC, etc. If they're bearish, God forbid they're bearish, they get banned. So let's go back to what I just spoke about earlier, in that the game that they're playing, the story they're trying to spin to trick you back into the market, is that the market is cheap. And it is not cheap. We are just coming off of an overbought level. In red, you have PE over 20, which is historically expensive. PE in blue here in the middle. That is a fair value. The average over the past 75 years is PE 15. And then, of course, in green, you have an undervalued market. And, of course, that's the best time to really begin to build your portfolio when there is blood in the streets. And trust me, back down here, the reason why the PE got so low post-2008 financial crisis, there was blood in the streets. So don't go buying into the story that stocks are cheap. They are not by a long shot. We closed out the day yesterday with PE 19 on the S&P 500. That is not cheap. It's still expensive. Let's move on to last week's price action, but we're going to begin first with the quarterly chart. I spoke about the quarterly chart last week on Best Stock Charts. I highly doubted that we would be able to rally back to recapture this prior lower band of support. And the probability of it happening on a very light volume Monday, the last day of the quarter and the year, is extremely improbable. So what we are looking at right now is a big breakdown in the stock market. Now, I mentioned last week, because I'm coming off bearish right now, I mentioned last week that you should expect a rip your face off rally, and in all probability, it would happen the following week, which was last week. And that was right here on this bearish key reversal day, the 21st of December. That was the last trading day prior to my last Best Stock Charts commentary. And I said, expect a rip your face off rally in the market, but that does not mean that we will not make new weekly lows. I predicted that we would see new weekly lows. And in fact, I'm just going to play for you what I had to say back on last week's Best Stock Charts. Here you go. The coming week. But first, I want to talk about last week, how we did. Because in this market environment, it's really not right to put out commentary without saying, okay, how are you positioned? And were you washed out with the rest of the market last week? And we were not. We went into the week short of Twitter. And we were long, and we are long of the gold mining stocks, the NUGT, which is at current up 7% last week alone. We're also long of silver, which was up last week, using the USLV. Now, I will say this. On the back half of the week, I did begin to put our toe in the water, and we began to buy the small caps. We also began to buy emerging markets and a big investment bank. Because again, folks, we are going to get a rally. Now, if we break down to new weekly lows, might I stop out? Sure. Am I concerned that maybe I got in a little bit too early? Yes, I am. If you've had cash on the sidelines like we have had, and you're looking to take advantage of what is going to be a rip-your-face-off counter-trend rally to the long side, sure, you could begin to nibble on stocks, but don't bet all your chips with one hand. Why? It's because we can go lower. And frankly, after looking at how we closed out the week last week on Friday, I'll bet you a nickel that in all probability we will make new weekly lows this week. Now, this is going to be an abbreviated week, and volume is going to dry up. So we may see a spike higher this coming week. I do not believe that it will be the bottom. I believe that you're going to have the algorithms in charge while all the banksters go on their private jets out to Aspen to go skiing, and they'll keep the computers in charge. So I wouldn't expect much in terms of a major sell-off. Now, at least this week anyway. Now, we do have a government shutdown. Who cares? The mainstream media will, of course, blame Donald Trump for shutting down the government. That's why the stock market's selling off. Nothing could be further from the truth, because what does a government shutdown mean to the stock market? Absolutely nothing. All the government shutdown does is inconvenience tourism. All right, so you could see that on Monday, we gapped down, a big move lower, a new weekly low, and then on the 26th, here was the rip your face off rally. Now, what we were doing while there was blood in the streets was that we were accumulating positions in anticipation of this rally. We were buying an investment bank, which moved higher last week. Members will talk about this on the week ahead commentary coming out tomorrow. We were buying the Russell 2000. And we were also buying emerging markets. All three did very well. We were long of the gold miners. That did very well last week. And what did spectacularly was our long trade of silver. So a very, very good week last week. But this chart is telling me that we are already seeing a little bit of exhaustion because we were up on Friday. We reversed the close lower. Does that mean that we're going to roll over and break down to new lower lows? No, I'm not saying that. I'm saying that while the week ended up very good, we did hit historical resistance levels. We may get a pullback on the 31st. I wouldn't be the least bit surprised to see them keep the stock market higher on the last trading day of the year. But honestly, with this type of price action at resistance, we're going to be looking to book some profits in our portfolio in anticipation of a pullback in this market. If we get a higher low, that's great. If we get a pullback like we did here on the 27th, that's fine as well. I mean, this was a 900-point reversal day. As a matter of fact, I did a swing trading today on the 27th. The futures were down big, really big. And I warned, don't panic. This pullback may be a buying opportunity, which in turn it did, and we did take advantage of it. And here's what I had to say on swing trading today while I reviewed the 4-hour charts. We're going to kick things off with the NASDAQ composite, which had a huge day yesterday, but we are pulling back this morning and we are weakening up here. At current, we are at the lows of the morning session. I think that what's going to happen here is we're going to retest, which we're not far from right now, any minute. We're going to retest the breakout point, and what we'll look for are buyers to step in and help defend this current support level, which was resistance. So we're going to edit this now. We're going to turn this red because we do not want to see the NASDAQ close this 4-hour bar down below this lower band of support. And you can see that we just opened up a 5 a.m. bar. We're holding thus far. We have another 4 hours to go to see whether or not we will hold support. And in the end, we did ultimately hit the lower band of support. Taking a look at the S&P 500, very similar price action as to what we are seeing on the NASDAQ. A big update yesterday. We are now giving back some of those gains. No shock here. We left the day yesterday, intraday, pretty overbought. So for us not to expect a pullback would be a bit short-sighted. I think that this may be a buying opportunity, assuming that we hold this lower band of support, which is now in red. And as we saw with the NASDAQ, we've opened up a new 4-hour bar at 5 a.m. Eastern Standard Time. We are now holding support. The question is, do we close there? Or do we fail and break down below this lower band of support? That would not be good. At current, I'm viewing this as a sharp pullback and a retest of a breakout point. It's as simple as that. Let's not read into it, unless, of course, we break that support level. Okay, so we had a beautiful reversal day. We bounced off of that 4-hour support level on the S&P 500, on the NASDAQ. We had a follow-through day on Friday, but it was unable to hold its mud. That's a problem. Down volume was very light. So, members, what we're going to do tomorrow, which is Sunday, is we're going to go over all the major averages and the indexes. We're going to talk about where the markets have been, where do I think that they're going on a weekly basis, because we hit significant resistance levels on many of the averages last week, and we're going to talk about it. We're going to think through our strategy, and then we'll do some analysis of the stocks we are long of, as well as our gold mining trade and silver. And then I'm going to do a deep dive into the stocks that we are going to do a cursory review of on Best Stock Charts this week. We'll begin that in a moment. So if you're not currently a member, please sign up, 14-day free trial offer. Okay, let's get to it. Let's segue into Best Stock Charts for the coming week. Hey folks, thanks so much for watching, and we're going to begin again in just a moment. But first, I wanted to make a really big announcement. I'm really excited about it, and I think you're going to like it too. And the announcement is this: I am going to be raffling off a 1-year gold level membership to the Contrarian Trader. That's right, trade alerts, daily commentary, paper trading simulator, access to the members forum. And I will be announcing the winner on January the 5th, 2019. All you need to do is pause this video, click the subscribe button, click the like button, and you're in. That's it. So don't wait. Enter now. I'll say thank you in advance, and let's get back to the rest of the commentary. First chart up, Build-A-Bear daily chart. We've spoken about this one, I think, for 3 weeks in a row now. RSI at current is 13.72. Folks, it's going lower. It has broken through the initial support level we were looking for it to hold. I think that we are going to break down and move lower, and I know some of you out there who are RSI lovers, you're saying, Jesus, this guy's nuts. There's no way. A 13.72 handle on RSI is ridiculously oversold. I'm going to go jumping in on Monday. I'm going to buy this stock hand over fist. If you do, you will go broke. Don't do it. Because RSI has come off the lows. We were down at 10, if not sniffing around below it. I think that we can head lower and down to sub 10 on RSI. Why do I think that? Simple price action, folks. Let's throw some lines up here. It's critical. Get your crayon out. Put some lines up and identify the pattern that you're seeing and use it for historical reference, because you learn a lot from your past observations. So here we have it. I always like to say that the markets send you signals, and you have a few of them here. So let's walk through them. First off, we rallied on the 21st. Resistance was hit. We reversed the close lower on the day. That set the stage for a continuation move lower. Bearish stuff. That was the market sending you a signal. You didn't need Goldman Sachs to come out with a downgrade of the stock to know it was going down lower. Fast forward to the 26th, you had a reversal day, not a bullish key reversal, meaning that we reversed off the lows of the day and closed at the highs of the day. We did not close at the highs of the day. We backed off. That's a bit of a concern to me. That's a lack of conviction. Fast forward, 27th, we rallied. We put in a new intraday high, even a new closing high. But what did we do? We sold off the high of the day. Fast forward to Friday. You're starting to get the drift here. We rallied, new intraday high. What happened? Bearish key reversal. In all probability, we are going lower. And volume rose on Friday. Now, I do believe that we will see a bottom in all probability next week. So members will be talking about our next historical support level on a monthly chart on tomorrow's The Week Ahead commentary, so stay tuned. Tuesday morning store. This is another one where I've been talking about it for a few weeks now. We have RSI at 5.71. If you thought that Build-A-Bear was oversold, that's nothing compared to Tuesday morning, which is, again, 5.71 on RSI. Guess what? I think it's going lower. And I even began to accumulate a position on Thursday. Now, why do I think it's going lower? Because on Friday, we rallied. But what did we do? Reversal day. We do have a historical support level we are looking at. I've been referencing it. When we sent out our trade alert on Thursday, I said, expect us to go lower. But I did want to scratch the itch to have some involvement. Once we hit our historical support level and we get our reversal day off of that support level, we will be buying aggressively Tuesday morning store. So members, stay tuned for a deep dive tomorrow on the intraday charts as well as the monthly charts for historical support. U.S. Bancorp, this was an extreme oversold stock last week. I'm only talking about it because it did rally. We hit a low of 42.79. It rallied off the lows. I think that this trade is in all probability as a scalp done. Your risk versus reward versus last weekend when I spoke about this stock is completely changed against you. This is not an investment right now. I think we're going to pull back. Maybe we'll get a higher low. Maybe we break down to new lower lows. All I know is this. My edge is gone. RSI well above 20 now. I'm no longer interested unless, of course, I see it set up on a weekly chart as an investment or if it once again becomes an extreme oversold stock. So for those of you out there who traded to the long side last week, congratulations. Think about booking some profits. BHP Billiton. I spoke about this one last week as well. I like the stock. We're getting ready to pull the trigger on BHP. We have RSI. Let's update the chart. RSI has begun to put in higher lows and higher highs, but I'd really like to see a breakout above this primary upper band of resistance on RSI. So members will be talking about an entry strategy for BHP Billiton on tomorrow's The Week Ahead commentary. Really good price action last week. One concern I do have was volume action, but let's face it, it was an abbreviated holiday week. So what do you expect, right? So I'm going to give it a pass on volume for this week, but I will be looking for higher highs on up volume next week. No excuses. If we don't get it, I will avoid. Members, more to come tomorrow. Broadcom, weekly chart, another one where I spoke about it last week, and I liked it because it was showing relative strength. Now, what we have here is RSI, which is broken out. It did so the week of December the 10th. It pulled back, retested support the week of the 17th of December. Now, last week, we began to bounce off of support. Good stuff. The problem, we have resistance right here at 258.86. Let's mark it. Now, if you are a Broadcom bull, you must write the number down, 258.86. It is critical because this, at current resistance level, you saw a breakout point failure back here in November 17. We had broken out, reversed to close lower. It attempted to rally, it did rally on the week of November the 20th, 2017. 2 weeks later, it broke down again. Fast forward to now January 2018, broke out. What do? The following week, we broke down yet again. The week of March 12th, 2018, we attempted a breakout. It was rejected. Fast forward to June of 18, another breakout, another failure. So this is a critical line in the sand. So what we learned from the weekly charts is that when we enter a trade where we have this type of historical reference to deal with, and it's really not dealing with it, it's great to have, right? This is the market telling us, okay, Expect problems here. The market's sending you a signal. If you don't look at the chart, you're ignoring it. And God forbid you listen to some well-dressed joker on the financial news media pumping the stock up. He's not going to tell you the story I just told you about this stock because he doesn't want you to know. He's just a well-dressed salesman. So what we want to see here is a breakout above 258.86. Does that mean you go running in and buy your intended allotment? Meaning, if you're going to buy 100 shares, are you going to buy 100 shares the minute we close above 258.86? Never. Never. Is there a reason to scratch the itch and put on a small position? Absolutely. You want to be net long only when we are trading above 274.90. You have other resistance levels to contend with. So members, more to come tomorrow. We'll talk about how we want to, as always, scale into, in this case, Broadcom. Price action last week, outstanding. It was a reversal week, good stuff. We retested the breakout point yet again, and we also retested the 50-period moving average. Broadcom is looking good. So if this market holds up, I think Broadcom will be a leader. The next chart up, Deckers. We spoke about it last here as a potential short on the 21st. On Monday, the 24th, we gapped down. So were you short on Friday, the 21st, and book profits on the 24th? You did quite well. The problem was, of course, the 26th. Now, if you didn't cover your short, unfortunately, you got hurt on the 26th. Now, what do I think is next for Deckers? Do I think that it's best as a long or short? I think that in all probability, we're going to head lower. I don't know whether or not I would want to short it any longer. I think my best risk-reward opportunity was back here, which would have played out were I wise enough to cover that short. But the reason why I'm bearish on it right now is because we broke out above not one resistance level, but two resistance levels. And if you want to count in the 126.24 level, which was resistance for 3 days, that's three resistance levels on Monday. What did we do on Friday? We closed back down below the lower band of support. There's a very good chance that we pull back down to retest this lower band of support. And if we do so, I think there's a very high probability that we break and we move lower. Now, I'm going to share with you the weekly chart of Deckers, which I'm going to talk about with members tomorrow on the week ahead commentary. And I'll point out to you what I'm looking at in terms of what I'm seeing is actually bullish. There are some bearish market signals here, but there are some bullish ones as well. I would not short Deckers. In looking at the weekly chart right now, I would avoid it. And we'll adopt a rules-based approach, meaning if we break out above resistance on a weekly basis, we'll get long. If on a daily basis we break down below, ideally 122 per share, we'll look to short it. But I wouldn't do it unless the question of as to whether or not we are breaking out or breaking down is resolved. So the daily chart is quite bearish. The weekly chart, there's reason to be bullish. So more to come. We'll track it. Dollar Tree, weekly chart, up 5% last week. We were looking at it as a potential short. It's still a potential short. The way I'm viewing this price action right here, right now, is that we have a dead cat bounce. We closed up last week, but it's a lethargic trade. You know, you're saying, you know, we closed up 5% last week, Bob. What's your deal, dude? Well, my deal is that we didn't close above significant resistance. The pattern hasn't changed, and I'm trading the pattern. The price action last week was anticipated. You had a short covering rally. Now, would I go shorting on Monday? No. We'll do a deep dive into Dollar Tree tomorrow on the week ahead commentary. Shopify. I spoke about this one last week as well. Now, we were looking a few weeks ago as the stock being a potential long. It is now back on our watch list as a potential long. We did manage to recapture not one resistance level, but two resistance levels last week. Volume was light, but again, expected. It gets a pass. We still have a downtrend on RSI and the stochastics. That's going to need to get resolved. So while I am bullish on Shopify, am I ready to buy it yet? Not quite sure. We'll go over that with members tomorrow on the week ahead commentary. We'll do a deep dive into the daily chart and the price action. And that is it for this week, folks. Please, everybody have a very safe and happy new year. I look forward to another year together. And thank you all very much from the bottom of my heart for your support this year. It's been wonderful. Again, happy new year to you. Be well. Hey folks, just a really quick thank you for watching this far into the video. I appreciate it so much. And a quick reminder, don't forget about our 1-year gold membership raffle. That's a $1,164 value. And all you need to do is just click the subscribe button, click the like button, and you're entered. That's it. And we'll announce the winner on January the 5th, 2019. I'll see you there. Let's get back to my commentary. And if you have any questions, leave a comment below.